Welcome back to Market Call tonight. I'm Jamison Burrows, still here with David Burrows. He hasn't run away yet, and we are going to get into an email-based question, David. It is from Anthony in Cumberland, wants to know about Marantria, whether now is a good entry point into that auto parts maker.
Okay, so let's start again from the macro. In general, the consumer's in pretty good shape in the U.S. There has been a lot of concern over the last year that we were looking at maybe peak auto for the cycle. It doesn't look like that's the case, but the auto parts companies and the automakers had a difficult time. The group that people were focused on within that sector were the auto parts retailers. And in the last 2 to 3 months, the auto parts companies have started to come on, and as have some of the manufacturers, the OEMs. So that's a positive, right? So we like auto parts. The difficulty is we do face a risk of some kind of border adjustment tax. Mm-hmm. And that could be risky for the Canadian producers.
Sure.
So that would be a concern there. I prefer something like Delphi in the group. We don't own it. But if you're comfortable with that risk, this is a good company. I would say Linamar looks a little bit better in the Canadian marketplace.
Same risk for the border adjustment tax.
Same risk. The stock's acting a little bit better. But the group does have a bit of a bid right now.
All right, we're going to go back to the phone lines now. We're going to kick it east to the Schwa, where Kevin is standing by. Kevin, you're on the air with Market Call.
Hi there. Thank you for taking my call. Mr. Burrows, I would like to know your opinion of the TD Bank. Would you be inclined to buy it at these levels? I know that the dividend you get from it is treated well with taxation. You get the dividend tax credit. So I'm contemplating on buying the TD Bank. It does have a good presence in the U.S. Or would you prefer to buy another U.S. bank other than the TD Bank at this point? Thank you very much.
Okay. So let's start with banks as a group. I think this is one of the themes that will be a theme that will play out for the next number of years. Right? This group is the group that is best helped by rising interest rates, and we believe we saw an inflection point in interest rates in June of last year, which was ultimately a 30-year low, and we think that over the next number of years we slowly see rates go higher. This is a good thing for banks. Now, given a choice, Canada versus U.S., at this point, despite the fact Canadian banks have been great investments for many years, I think you may be in a better spot with U.S. banks.
Even after so far they've run in the last...
Well, the U.S. banks are very inexpensive. So to give you a sense for it, they've traded at 2 to 3 times their book value several times in the past and for extended periods of years. So Bank of America, we'll talk a little bit about later, is trading at 1 times book. Wow. So that assumes book value doesn't grow.
Right.
But book value is now growing at north of 15% because rates are going a little higher and the economy is getting a little better. So I do think there's more room for dividend increases in the U.S. banks. I do think they're more helped by a little bit more dynamic economy for the current environment. You know, energy could be a drag in Canada. So I would take a look at something like J.P. Morgan, which has had a nice pullback in the last few days. I'm going to talk about another bank in top picks. Or you could look at one of the investment banks like Morgan Stanley. And I think they could do quite well also. You're going to do fine in TD. We own some TD, but if I had to buy one right now, I'd prefer to be buying in the U.S. than in Canada.
Yeah, well, maybe some points off for a lack of patriotism, but possibly a profitable answer there. Of course, remember to consult your broker before making any investment decisions. We're going to bring it back to our home turf now, where Natalie in the Big Smoke is standing by in Toronto. Natalie, you're on the air.
Thanks so much for taking my call. Mr. Burrows, I very, very much value your opinion. I always watch you when you're on. And in the last day, while I know you've been speaking very favorably about the U.S. defense stocks, I haven't listened to you because maybe I should have. I would have done very well. I'm just wondering if I'm too late to venture there. And if not, what would you recommend? And, of course, for a very long-term hold. So Thank you so much for taking my call.
So Natalie, the defense theme is one that we've been focused on for a couple of years. We've been coming off multi-year lows in growth in defense spending, and pretty clearly we're going to see more defense spending going forward. We really like defense for a couple of reasons. First of all, the contracts are really long-term, and they've got a pretty good credit behind them. The payer can write the check. The second thing is that it's the only type of company that never talks about what's coming next. right? Everybody wants to tell you about the next great product that they have. Defense companies are dead quiet, right? So you get this optionality in these things for the things that they're developing and they're giant skunk works. So the reality is, I think that these companies are in a really great place. It's not just selling to Donald Trump in the U.S. Defense spending is rising around the world. So companies like Raytheon and General Dynamics and Lockheed Martin, I think, are very attractive. We are significant investors in this space. And, you know, as I've said before, the hardest thing to do in a bull market is to stay invested. And unless something changes, you want to stay in the leadership. Now, we use stop losses on our positions. Should they stop working, should the breadth start to deteriorate in the group, we will make an exit. But at this point, I would continue to be an investor. We have a pretty rosy outlook as we go through this year. And I think we're going to get more and more information supporting this group.
Well, Lockheed Martin says that they're 10 years away from figuring out cold fusion, but we're not that far away from past picks. They're actually coming up after this short break. Please stick around.